Really, congratulations on Bank of America's commitment, $1.5 trillion towards sustainable finance, which is pretty incredible. And we know that about 2/3 of it is going to the environmental transition. So for me, that means that where others see challenges, you see opportunities, which is amazing. So elaborate on that perspective. Tell us what you're doing, where you see the greatest potential for impact, and how you're facilitating that.
Sure. Hello, everyone. It's great to be here. So yes, a little bit of background. Bank of America is committed to mobilize $1.5 trillion towards the UN Sustainable Development Goals by 2030, with $1 trillion of that devoted to the environment. So the question is, how are we going to get there? How, how confident we are? And the answer is, we're pretty confident. In fact, we think we can probably exceed that goal by 2030. And the reason we're so confident is because while many people think of the race to net zero as a huge challenge, and it is, it's a complex challenge, we also think of it as a huge opportunity. Many of you know this, but just about everything we produce, use, and do every day puts greenhouse gases into the environment. Just the attempt by all those who have committed so far, with more companies committing every single day, to get to net zero in less than 28 years, is going to have more impact on the world economy than the Industrial Revolution. It's a huge challenge, but it's also a huge opportunity. Companies that do this well across all industries, not just high-emitting industries, but across all industries, companies who do this well are going to see their market share grow. The largest companies in the world have all committed, 100 of the largest banks, 140 of the largest countries. And by the way, the world's smaller and mid-sized companies, many of them are committed as well, but the ones who haven't, they're all in the supply chain, which is a fancy way of saying they sell their products to companies who have committed. So they're covered by a commitment as well. In fact, 90% of the world's greenhouse gases right now are covered by some sort of commitment. So again, just the attempt by everybody who's committed is going to transform the world economy. If you listen to experts, they'll tell you we need twice the amount of annual investment, at least twice the amount of annual investment to get to net zero. McKinsey says that number should be about 275 trillion. Just think about all of the innovation, all of the jobs, all the social economic development, including in the global south, that's going to surround an investment of 275 trillion. So we've got to get to net zero for our children, but it's also the best opportunity for the world to grow responsibly. But who's going to come up with 275 trillion? Much of it has to be front-loaded in this decade. Governments have to play their part, but their budgets are pretty strapped, and frankly, they don't have 275 trillion. It's going to come from the private sector via banks and via the capital markets. And it's already happening. That should make us feel good. It's already happening. If you take a Bank of America, for example, we have the $1.5 trillion commitment. We've already mobilized $410 billion towards that commitment, with $250 billion of it focused on the environment. We have our own transition plan. So we've raised $14 billion through sustainable linked bonds. More important than that, we've financed 16% of the wind and solar in the United States. And even more important than that, companies have transition plans. And so we've raised, or helped to raise, over $500 billion via 700 bonds that are linked to metrics, specific metrics around sustainability. Now, sustainability bonds, they kind of get all the attention because they're public. But companies use all our products to get to net zero. They use loans, they use bonds, they use equity offerings, they use treasury services, they use derivatives, they use M&A, they use sales and trading, they use all our products to get to net zero. So when you see a bond, a sustainable linked bond that's being issued by a company, that is just the tip of the iceberg on activity that's already out there as companies transition to net zero. And companies, big and small, across all sectors, not just the high emitters, they are transitioning not only because they see risks, but also because they see a huge opportunity surrounding net zero. The opportunity to take market share from maybe a company that doesn't have as good of a transition plan or no transition plan. Remember, every company is virtually in the supply chain, or they sell to another company, and every single day more and more companies are committed. Maybe it's the opportunity to get some of the 275 trillion of investment. One company's investment is another company's revenue. So we are confident we can get to our $1 trillion goal. In fact, as I said, I think we're going to exceed it by the end of the decade. And I think we all should be confident that the world can get to net zero because the incentives are out there for the private sector. We as a large bank, we see the activity of our clients. And because net zero is, it's not just a big complex challenge, it's also the biggest and best opportunity for the world to grow responsibly.
Thank you. I think it's so important for people to understand that there's such a broad array of financial instruments that you have at your disposal in order to make this happen, in order to enable companies to reach their goals. And it doesn't have to be anything new.
It's our existing products they're using.
It's great. Really fantastic. Addressing climate change, we all know, we've been discussing it for the past 2 days, involves so many different stakeholders. We talked just a moment ago about the private sector, but each of these stakeholder groups have different roles, and all of them make a joint commitment to get to a low-carbon economy. So from your vantage point, how does the public sector and the private sector work together? How do they work together in order to advance these goals, in order to get to our low-carbon economy? What are these public-private partnerships really doing, in your view, and what must they do?
Okay. Well, first of all, we have a perspective that the world is not going to get to net zero without the private sector. But we also believe we can't do it by ourselves. So governments, nonprofits, individuals, private sector, they all have a role to play, and they all have to work together. That's why we're a member of lots of global coalitions, the International Business Council, Breakthrough Energy Coalition, First Movers, and my favorite is the SMI, which is Sustainable Market Initiative, which our CEO, Brian Moynihan, co-heads. That's a group of 200 executives that come together often to talk about the projects they're working on to accelerate the transition. A group of those leaders met with the G7 in their last meeting, and they met with the G20, and that's the first time a group of private sector leaders have met in those forums. So coordination is happening. We're not asking for money in the private sector. We have the money to do this. But there are things that we can coordinate on together, and I think are coordinating in order to speed the transition. So I just want to list a few of them. The first one is we need to develop better and more trusted carbon markets, including a price of carbon, so that everybody who's making an investment decision on a project knows what the true cost of carbon is. The second one is we need to create demand signals for green energy that's going to fuel the transition. Those demand signals are going to stimulate the development of supply. So companies, governments, they need to put in orders for green energies years out into the future, so that people who are creating that energy have the confidence to invest, and they can get the financing to do it. The third one is we got to continue to incentivize investment in early stage technologies and in the scaling of early stage technologies like green hydrogen, carbon capture, nuclear fusion, many others. I would say the third one is that we need to reform the multilateral development banks and other financial institutions so that their activities encourage the private sector to come in and help finance the transition in the global south. And then the last one that I think is very important is that the public and private sector need to work on the right disclosures. So right now, we have a lot of voluntary disclosures out there. I'll spend a minute on this one. We have a lot of voluntary disclosures out there. It's sort of become an alphabet soup of disclosures that are inconsistent and overlapping. And we need disclosures that are uniform across the globe, transparent, objective, and most important, trusted. And to be trusted, disclosures have to be something that can be measured, and they have to be material. And if we can get disclosures that are uniform across the globe, objective and transparent and trusted, then market participants will be able to compare the activities of corporations and other entities across the globe, and capital will flow to its best and highest use, and we can speed the transition along. Plus companies, by the way, they can spend their time on actually reducing their emissions instead of reporting under 4 or 5 different or 7 or 8 frameworks that have the potential to confuse investors. So Bank of America, other large companies, we got together with the 3 large accounting firms, and we came up with something called this, now I can't remember the name, but what are the stakeholder capital metrics, thank you. We worked with the 3 large accounting firms. It was based upon the voluntary, framework that's out there. And 200 companies have signed on. We've been reporting for 3 years. 150 other companies have been reporting. And oh, by the way, that's just one way to do it. We'd love it if everybody got on board with that, but we just want one, we'll sign up for anything. One uniform standard across the globe, transparent, objective, and has to be trusted.
Let's go back to emerging markets for a moment, because many people are skeptical about the kinds of capital flows that you've described going to the global south, to emerging market economies. How do you see it?
Well, look, the global south is incredibly important to a just transition. And, but you have to remember that the large global banks, we don't today operate in many of the countries in the global south. We don't understand the risks, the opportunities. We don't deliver credit or monitor loans there. We don't have people on the ground. More daunting than that, the laws, rules, and regulations in the countries we operate on, they don't allow us to use your deposits for investments of that risk profile. Remember, it's not the bank's money, it's your money in the form of deposits, and that's a highly regulated. So look, there's solutions here. We are already working with some entities, but we need to combine, we need to work with entities like multilateral development banks that operate in those markets, to understand the risk, they can deliver the loans, they know the players. And we need to blended finance, we need to blend our capital and funding with their funding, because their funding is different. Their funding is from their shareholders, which are countries and taxpayers. Their funding can have a different return and certainly operates under a different regulatory framework. So again, it needs to be tweaked. They need to be tweaked a little bit so that private sector, it encourages private sector to come in, and we can get a lot more done a lot faster. We're doing it today. It's a lot of work. If we industrialize this model, make some tweaks, we can do it a lot more, a lot faster.